Good morning and welcome to the 4GLOBAL PLC full year results investor presentation. Thanks for recording meeting. Investors will be in listen-only mode. Questions are encouraged, can be submitted anytime via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you to Eli Mazon, CEO. Good morning.
Good morning, and thank you for joining us here today. With me, I've got Keith Sadler, who is our Chief Finance Officer, and Tropat Seven, who is our Chief Development Officer. And we put together a presentation structure in four parts. First, provide you with an introduction about our business, to then move on to discuss the financial performance last financial year, and then finish off with a strategic update of where we are in executing our strategy and also a look ahead. So let me start by introducing you to 4GLOBAL, our company. In terms of what we do, we provide our customers with actionable insights, which enables them to make faster and smarter decisions about their customers, about their operations, about their business. And in essence, it's all about their business and how to grow them. And we're able to do so because we have developed one of the biggest databases of physical activity in the world. In essence, how people consume and do a sport. And we'll go in more detail. Luca will take us through more detail as to the different elements of our data sets. But in essence, it's combined of three core data assets. One is what we call a structured data, which is from plant activity. The other set is movement data, which is from your mobile phone signal, and the third one is wearables. And we combine all of these with AI to draw those unique, actionable insights for our customers to answer strategic questions as to how to grow their business, as I mentioned, about their customers, their operations, and where to invest their money. And we've been doing this for a while, and we've worked with some of the biggest brands out there in our core markets, which, as you will see later on, are the European market, Middle East, and North America. And as a business, we've got very strong business fundamentals. We've been in business for a long time, and these are the figures for last year. So as you can see, we are revenue generating, we're profitable, and we've got a robust balance sheet. And more importantly, since we came to the market, we have grown significantly in terms of revenue, but also in terms of adjusted EBITDA since we listed in December 21. So that's a very quick run through in terms of what we do, how we do it, who we do it for, and who we are as a company. Let me spend a little bit of time talking to you about how do we generate revenues, how do we make money. And in order to do that, let me start talking to you about our customers and how we segmented. Our customers are segmented in three groups. So the first group is what we call the public sector customers, which involves governments, sporting bodies, which in essence are sporting federations. So this could be FIFA or UEFA or the IOC or US Soccer, those type of organizations, or associations, sporting associations, like UK Active or Europe Active or their equivalents in North America. And for these client groups, we solve three particular problems through our insights that we generate from our data and AI tools. First and foremost, insights about who is active, so who is actively doing sport and who is not doing sport, but more importantly, why. So insights around that so they get an intimate understanding of sport participation and why it happens. Secondly, around how to target their investment to actually modify those behaviors, either to get people to do more sports that are already doing sport, or to those that are not doing, to get them into sport. Now, different customers will have different reasons to do this. In the public sector, is because it drives significant health outcomes, as we all know. And in the private sector, like, for example, for federations, is to drive participation into their sport, which effectively increases their commercial value. And the third issue that we solve for them through our insights is evaluating the impact of those investments, and not just evaluate, but measuring it and maximize the return on investment. So that's for the first group of clients, and the average contract value per annum on this customer group is between £250,000 to 1.5 million per annum. The second segment is the private sector sport, fitness and wellbeing facilities. And for them, we solve, again, three very specific problems, all about their customers and all about growing the business. So how do they increase retention of their existing customers and reduce attrition? How do they attract more customers to the facilities, and how they increase the yield per customer? And finally, how do they increase the lifetime value per customer? So again, it's all around their customers, it's all around their business, and where to invest the money to really drive that growth. And again, the average contract value with this customer group ranges between 25,000 to 150,000 pounds per annum. And the third segment is the same as the previous one, but for public sector facilities. These are facilities owned by the public sector, but more often than not operated by private sector operators. And we solved exactly the same problems as with private sector facilities, with one extra one, which is evidence what impact and what social impact their investment and their activity is having, because as public sector bodies, that's a really important element. So these are our three customer segments, and give you an idea of the contract value per customer in each one of those groups. So let me hand over to Utku Trobak-Seven, our Chief Development Officer. He will take you through about that unique asset that I was talking about, and how we use that unique asset to really draw unique actionable insights for our customers. Okay.
Thank you, Eloy. So as Eloy mentioned earlier, our data set consists of three main parts. On the top of that, we have what we call the data hub. And we have created Data Hub about 10 years ago. And for the last 10 years, we've been collecting data from regular structured activity that happens in a facility environment, or in community centers, or outside in parks. And this is everything from people going to gyms and exercising and joining different group classes, to people joining sessions that happen in the park and running outside as well. And recently, we have added on top of that variable data, which helps us to complement the activity happening in structured setting with activity happening outside, people running or cycling in places, and collecting data from those as well. However, there is an also important component where all of this activity is now looked from a place-based approach. So not just from people doing individual activity, but in different geographies where the structured data is not available. So things like cycling routes, things like running routes outside, and movement data, which is primarily coming from data sets that is generated via mobile signals, generate an important data set that helps us complement this picture. And within those three data sets, we have generated over 5 billion data points. What it means is every day we are getting more than 1 million data points about people's physical activity, and we bring this data together to generate insights. And at the heart of this, we have AI. And what AI allows us is two important benefits. One of them is it helps us to improve efficiencies, so to standardize this data and to process it in a much more efficient way, so we can generate sector-level insights, but also making our insights much more personalized. So making it possible to generate answers to the specific questions of the individuals, even at a personalized level. So if we go to the next slide and look at how we convert this data into useful insights, there are three stages of digital transformation that our clients go through. And as Eloy mentioned earlier, we have clients from smaller sized operators running a couple of centers to governments running all of their sports using our data and insights. So this data maturity curve helps us understand where they join this journey and how they develop over time. At the starting point, we have the basic reporting, which is more about understanding your own business. How do you perform compared to the rest of the sector? What are the key drivers of your success or underperformance? Once you go through this stage, you move into data-driven decision-making. So this is all about you understanding where to target, who to target, what type of programs to offer to your customers, so you can improve your customer loyalty, increase your retention rates, and decrease your attrition rates. And once our customers go through this stage, they come to the final stage of the data maturity, where they look at predictive analytics. How do you model the data in order to forecast the future, to make the right investment and to generate the maximum return? And you monitor this through our platforms as well. And each client can join this journey at any point and continue with it over the lifetime with us. And in the future slides, you will see how this helps us to increase the customer lifetime value with all different customer segments.
Thank you, Ku. And just to bring it to life, the way we then deliver for our customers is through our offering. And we've lined our offering exactly at the life cycle that our customers go through. So the first element in our offering is what we call the Insight Lab. The Insight Lab is where customers come to us with what we call the big questions. So for a city, it might be, how do you structure a city so that 75% of the population are actively engaged in sport? It could be a federation saying, how can I accelerate the uptake on participation on my particular sport, because that's going to drive commercial gains. Or it could be a facility operator who's looking at investing a significant amount of money in building new facilities, and they want to understand where and what type of facilities. And it's here where we leverage our data, our models, and our tools to really generate those answers for our customers. In commercial terms, last financial year, this generated 2.9 million worth of revenue. And this tends to be what we call repeatable revenue, because this customer keep coming back for more and more questions, or even more detail on each one of the answers. The second element of our offering is what we call the Insight Solutions. And these tend to be customers, primarily at this point in time, on the first segment, the public sector segment of our customer base, who are looking at adopting our data and our platform to drive those actionable insights about their customers, their operations, and their investments, to drive those faster and smarter decisions. But they haven't got that capability in-house. So as part of the license deal that we agree with them, there is an element of customer success which helps them into that transformation and build that capability in-house, so that they understand how to embed the actionable insights that they generate through the platform and through our data in the way they run their business. So this has the added benefit that it makes our platform and our data a must-have rather than a nice-to-have, and it becomes very sticky in the organizations. And as Utku was describing, it drives them up that maturity curve to really help them generate more and more detailed insights about the business. And the final element of our offering is what we call Insight Platform, which is once they have the capabilities to really embed the actionable insights into their organization and the way they run the business, it just becomes a straightforward license deal. Some customers, as Utku was mentioned, can come at any of the stages of this life cycle, but equally is worth highlighting that just because a customer becomes an Insight Platform customer, that's not the end of the journey. Because if I can just quickly go back to Utku's diagram about how that maturity curve works, what we see is that people tend to go through this cycle over and over again, because once they've got the Insight Platform, that in itself generates new big questions, that generates new module sales at the Insight Solutions, that generate more Insight Platforms. So that's how we constantly not just landing new clients, but expanding the relationship with them. And really what we are designed is a life cycle and an offering that really allows us to build those long-term relationships with our customer that generates the annual recurring and repeatable revenue, as you see later on our financial review. And just to finish off, just to give you an idea of some of our customers in different groups, and what you can see here is that Insight Solutions and Insight Platform is over 50% of our revenue at the moment. And traditionally, most of our customers today and the Insight Platform are operators, which, as you remember from my customer segmentation slide, are of a smaller price points as the public sector, whereas the public sector ones tend to be at the moment in the solutions. What we anticipate is the public sector customers that are currently sitting in Insight Solutions to migrate gradually to the Insight Platforms, and that should have an impact on profitability as well as how the revenue split comes through. So hopefully that gives you a good overview as to who we are, what we do, how we do it, who we do it for, but more importantly, how do we generate revenue, and about that really unique asset that we believe we build around data. So let me move us on to the financial review of the previous year that we've just closed. And just before I hand over to Keith, I just wanted to take you through some of the achievements that we achieved last year. So from a growth point of view, what we're seeing is very strong revenue and profit growth, as you've seen from our results. And equally as important, when we first came to the market, we initiated that journey, that transition from a service to an annual recurrent and repeatable revenue model. And as you can see from our numbers, we're well on our way on that transition. And that's starting to come through not just on the split of revenues, but also on the profitability, which is very encouraging to see. Our strategy for international expansion, which I'll go into more detail later on, has seen a very strong demand from international markets, and particularly from the North American market. And we've won, as you will see later on, some really exciting clients in those markets. From a client base, we've not just only grown our existing client base, but we've also expanded our customer relationship. That's really important for us to not just keep landing new clients, but also maintain those clients over a longer period. And we've had some really significant business wins, and we're building some really strong partnerships in the US that I'll go into it later. And just to finish off from a product and talent point of view, we've released some very exciting new modules last year, and we've got a very exciting pipeline for this year as well that I will discuss later. And I'm very positive, even despite the current employment market at the moment, we continue to attract top talent to our business. Credit to our offering, the exciting place in which we operate, and the ethos that we're creating to the company. So let me hand over to Keith, who's our Chief Financial Officer, to just give you a quick run through our financial performance last year.
Thanks, Eloy. Good morning, everybody. This is just a very high-level review of our financial results, which we published. Hopefully, you've all received or downloaded the RNS from LSE. And also the published note from Canaccord. As Eloy was saying, our group revenue has increased by 14% to 6.4 million. This is still another significant year of growth. And as Eloy said, from our IPO in 2021, we have continued to grow the group revenue for the company. That's translated into a gross profit, and our margin has been maintained at around the 73-74% gross profit margin, and the value is up 15%. We then reported our adjusted EBITDA, which was above the Canaccord note for this financial year, which is up 30% from the 1.2 million, again signifying the fact that we can translate our increased revenues into increased profitability. And then the number in the bottom left-hand corner, our profit before tax, is at 200,000. This has been the impact of a provision that we put through, but also a tax charge. Last year, we benefited from a tax credit, and this year through a tax charge that has reduced our profit before tax. The cash and cash equivalents, we've utilised £1 million of cash during the year. This has primarily been through our working capital, and also we've made a £900,000 investment into our product platform, which is our global data hub, which we continue to build, which is being led by Utku and his team. And we will continue to invest in that product through this financial year, with the intention of taking it live at the end of this financial year, early part of next. And as Eloy has said, our target is obviously to continue to develop annual recurring repeatable revenues, and a significant increase for us this year is that we have generated 3.5 of revenues that we have identified as annually recurring and repeatable. And that's up from the 2.9 last year. Just to give you that reconciliation, and I'm sure you'll all have been through the RNS. There's a lot more detail in that RNS than shown here, but that's really just the reconciliation to show how we have gone from the adjusted 1.6 down to our profit before tax of 170,000, 200,000 rounded. And you can see the significant provision there, and also the increase in our finance cost through that. This is just a segmental analysis, breaking down where our revenues have been generated from. We've got our future, we see, is to be in North America. Historically, we've operated within Lima and Peru, and making our transition now into the North America, where we have established some very good partnership relationships in North America. We've appointed a head of North America, Alexandra Orlando, who used to sit on our board. She is now leading our development in North America. And we see that as a migration into that marketplace. And we've established some very good partnerships over there, as I've said, slightly repeating myself, but Eloy has raised those clients, Jonas, Canadian Tire, and a number of operators in that market. And so into next year, we do see some strong growth in that marketplace. And again, this is just the reconciliation of the cash position for the business and the utilization. As I mentioned, there are investing activities of 900,000 is into our intangible asset, which is the product platform, the global hub that is being developed by the team internally. And then just to give some context about our cash position from September 23 to our current cash position today.
Thank you, Keith. So just moving on to the final second half of the presentation, in terms of the strategic update. Let me start by talking a little bit about the market trends that we're seeing at the moment from being in the market, from talking to our customers and some of our peers. What we're seeing is a significant shift from software to data. And what we mean by this is that no longer our customers and customers out there are obsessive about getting the latest bit of data analysis software, whether it's from Microsoft or anyone else. What they really understand now is that it's all about the data. It's like having a great software without the data is like having a fantastic car without the engine. And what they really have a hunger for is those actionable insights that I was alluding to before, which effectively helps them make those decisions. That is what they want. They want information, they want insights that helps them make the right decisions. And the right decisions about growth. There is a massive focus at the moment about how do we grow the market and how do we grow their businesses, given all the different situations that are happening around the world. And the one thing that everyone agrees on is that the key to unlock this growth and to really make the right decisions is through data. That is the key to it all. So the way we're looking at capitalizing on these trends that we, not just us, but the whole sector, is saying, well, we're certainly looking at leverage our data, as Sutku mentioned and I alluded to, in our opinion, is the biggest in the world, if not certainly one of the biggest, especially around the granularity and level of detail that we can provide. So we're really looking at leveraging that asset to really empower our customers, again, building on those trends, to make faster and smarter decisions. And they need to do this about their customers, about their operations, about their investment. Because if they get that wrong, they're not going to achieve that growth, which is what everyone is looking at. So we are certain that we're in a really unique position to benefit from these trends. And certainly we've built an asset over the years and a business that is now in a really good position to capitalize on these trends and really ride the wave. So in order to do that, we've got a growth strategy which is underpinned by 4 pillars. First, this is from day one of us being in the market, is that transition to annual recurring and repeatable operating models, so that we've got predictable revenues and secure revenues that allows us to grow even faster. The second one is about growing our international customer base, as we've already alluded to, but as well about increasing the customer lifetime value. So we do want to land new clients, but we really want to expand those existing relationships and really maximize the value that we add to them, as well as the value that they add to our business. And the final pillar is about building for tomorrow. So making sure that our organization, our product, and our assets are growing at an adequate pace to support this growth. So let me go into a little bit of detail into each one of these. Oh, sorry, I should have mentioned, and underpinning these growth pillars, we've established a set of KPIs which we've now published, and you've got them on the presentation. I don't intend to go through each one in detail, but suffice to say that we're really pleased how we're performing against these KPIs, and this is something that we will be looking at certainly quarterly and half annually and annually in terms of our performance, so that we keep delivering to our strategy. So moving on to some of these pillars, talking a little bit about our international customer base. So I've already alluded that our focus internationally is in 3 key markets: North America, the Middle East, and Europe. North America is a key market. I've said it, Keith has said it, and I'll probably say it a few more times during this presentation. We're really excited about this market. Not only is it a huge market, but what we're seeing is that our offering, our data, and our platform is being very well received. And that's credit to some of the fantastic customers that we've acquired in last year, from US Soccer to other federations to cities, looking at hosting the World Cup, etc. Some really exciting customers that will act as a really strong foundation to building. And our strategic focus in North America is around 2 elements. One is to grow the game of soccer, or for us, European football, but is the game of soccer. And we're going to do this directly. We've got the relationships, we've got the track record, and we're going to do this directly, whether it's with US Soccer, whether it's with the MLS, which is the professional men's football, or the women's football league, or even the teams themselves. So we're really looking at growing the game of soccer, which is predicted to be the 2nd largest sport in the US by the time the World Cup hits the country. 2nd largest sport in the US. It's the amount of investment going in this area is huge, which is why we're so focused in this area. The second element of our strategic focus is the operators. As you know, the 2 of our client segments are operators, and we're going to do this through channel partners. And we've developed some partnerships already, but we're looking at closing other relationships so that we can cover the whole 3 areas, whether it's private sector, public sector, or parks and recreation. So that's our strategic focus. And we believe there's a really exciting sales opportunity pipeline for us over the next 5 years. We're not talking about total accessible market. That's far greater than that. It's an actual opportunity pipeline. So just to reiterate, North America is a really core market for us, and there's a huge potential for us, and all the indications and our performance in the country are supporting that. The second market is the Middle East. Now, in the Middle East, we have a very different approach to North America. Whereas we're investing in growing and developing and landing clients in North America, in the Middle East is a more reactive strategy. It's all doing through channel partners around the Active Nation agenda, which is to get people into sport, where our platform and our data is absolutely vital for it. And we've landed some really fantastic customers that they've placed their trust on us, and we're very proud of that. But as I said, we're working through channel partners primarily. And again, we see a really interesting opportunity, sales opportunity pipeline in this market. Not as big as in the US, but it's still significant. And finally, our home market, which is the UK and Europe. Probably too many to name here in terms of the customers that we've acquired, but our focus in Europe, continental Europe, is on private sector operators, whereas in the UK, we're working across all 3 of our customer segments. And again, a very significant pipeline, opportunity pipeline over the next 5 years. So as you can see, our international expansion is in full swing. Also, which Keith alluded to, this is the first year where our revenues from international markets have exceeded those of our domestic. So we're truly an international company. Our international revenue grew by in excess of 30%, and in the Americas for over 40%. So we're really pleased as to the trends in terms of the growth, where it's coming from, and how that is aligned to our strategy. Let me talk a little bit now about the lifetime value of the annual recurrent and repeatable. As you saw, we've got a really good mix of clients around the world in our core markets. And we're not only just landing new customers, so last year alone, it was in excess of 25% new customers, but the real focus was on expanding the customer relationships. Whereas the previous year was on landing new customers, last year was solidifying those existing customers and really developing really solid long-term relationships with them, as you can see it from the figures, which resulted on the great results that you saw today. It allows us to increase our sales on our more profitable side of the business, which is the inside solutions and the inside platforms, and to really move more towards that annual recurring and repeatable revenue model. Our customer satisfaction, as you can see, is an all-time high, is above 90%. And a lot of this is because what I was alluding to before when I was talking about our offering and inside solutions and inside platforms. This is a must-have rather than a nice-to-have. And once it's embedded in an organization and it's embedded in the way they make decisions and in the way they plan investment and they plan their activities, it becomes something that is really difficult to live without. And given the data asset that we've developed, it's very difficult to replicate by anyone else, which is why it's very sticky and why we've got very long-term relationships with our customers. And just to finish off, the final pillar that I alluded to was to future-proofing growth. And here we're focusing on three core areas. First of all, innovation. We've alluded about continuing really being on the leading edge of our products, our data asset, and how we continue to grow that. Bringing in movement data and wearable data allows us to get into countries and into new markets much quicker and much faster because we're not dependent on that structured data, and really rolling out AI as part of our offering to really give that unique, individualized insights to our customers, about their operations, about their investment, to really allow them as a business to grow by making faster and smarter decisions. The second element is sustainable growth. We continue to focus on achieving that 20% growth year on year, but we continue to look at M&A opportunities, primarily in the North American market, to really create that step change and to accelerate the growth in that market. And finally, continue developing our organization so it can keep pace with what is now an international business operating in multiple markets. So just to finish off, let me give you a quick look ahead, starting by the priorities for our year. So key priority, as it always has been since we came to the market, is continue that migrating to our annual recurring and repeatable revenue that started some years ago, and we continue on that track to provide that long-term visibility about our revenues. And we're well on our way to achieve that. Secondly, the North American market, I don't think I need to dwell more on this, but it's about continue growing the game of soccer and commercial activation of those partnerships to capitalize on the operators market. Product and data innovation, we've got a really exciting pipeline of new products that we're going to be bringing to the market around AI and the adoption of AI in our existing modules, and also new data sets to really generate even more detail and more insightful insights for our customers to enable them to grow. And finally, growth. That's a clear priority for us to sustain that organic growth. And for us, it's not about achieving fantastic growth one year and stall the next year or achieve a spike on share price. For us, it's all about sustainable growth, sustainable share price, and that's what we've been focusing from day one, and it's focused on delivering what we said we were going to deliver, and then obviously an acquisition program on the back of it to try and speed up some of that growth if we find and when we find the right acquisition. So what to expect of the current year? Well, from a commercial point of view, we continue to see a strong international growth, in particular in the North American market, and we're still going to be second half weighted revenue. That's the nature of our business. That's the nature of the market in which we operate in. It's becoming smoother, but obviously as we grow and as revenues get bigger, then obviously that figure also gets bigger. Secondly, from product and data, I've already explained, we've got a very exciting pipeline of products, but we also want to grow that data asset, because the bigger the data asset we have, and the more we combine our data asset with others, like movement data, like wearables, the more use cases we can commercialize for our customers. And if you remember that cycle that they go through, the more times they can go through that cycle for us to generate more value to them and allowing them to make quicker and smarter decisions, but also for us to generate commercial gains in the process. And finally, commercially, continuing that recurrent and repeatable revenue migration, and you will see that as we come through. So hopefully that gives you a good overview, not just as to who we are as a business, but how we performed last year, what is our strategy, and what to expect from us. And thank you very much. I would like now to hand back to moderator.
Fantastic. Thank you very much indeed for updating today. Ladies and gentlemen, do please continue submitting your questions using the Q&A tab situated on the right-hand corner of the screen. Just while the team take a few moments to review those questions submitted today, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we've had several questions put through today from investors, and thank you to all the investors for submitting those. Can I just hand over to you and ask you to read out the question where appropriate to do so, give your response, and I'll pick up from you at the end.
Thank you. If I may start with the first question, I'll read it out. How can we expect to see growth in ARRR as you move clients to the platform? Do you have milestones for the coming years for targets for ARRR as a percentage of the turnover? We do have internal milestones and targets, which obviously we can't share because that would be giving our forecast, which we're not allowed to. But I think if I can go back to our life cycle, what we can say is that as we see the migration of Insight solution customers, which at the moment are primarily public sector clients, which are bigger clients than the operators are in the Insight platform. As they move over to the Insight platform, what we would expect is the profitability of that element of the revenue to be much higher, because that's just a straightforward license with minimal customer success. Just to reiterate, Insight Labs is what we call repeatable revenue. So it's not recurring, it's repeatable in the sense that we can predict to a certain degree of certainty that what we're going to generate from each client every year. The other two, whether it's Insight Solutions or Insight Platform, is what we would class as recurring revenue. So what our aspiration, and we've said that from day one, is to get as close to 100% on annual recurring and repeatable revenue as we can, and we're constantly looking for ways to accelerate that. And I think the current trends and the way we align in our offering makes us feel very confident that we'll achieve that migration in the near future. Sorry, just looking at some of the other questions. Apologies, they're a bit far from me. It's a bit like being at the optician trying to read. To increase the market.
So you read it out?
Yes, I'm just trying to add to so. So one of the questions is around return on investors. How do you sell the return on investment for new customers? How large is the opportunity, and what are you competing with? I'll start with the last bit of that question of who we're competing with. I think we're in a very, very privileged position, and we're in a privileged position because the data asset that we build is pretty unique, because we're not just providing customers insights from their data. We're providing customers insights from their data in the context of the whole market data, which very few people out there can do. So we don't compete with anyone in that actionable insight when we provide the market data. What we used to see was competition around software, but the latest trends of migration into data and actionable insights is kind of putting us in a really good place, and that's why it's a huge opportunity for us, especially in the North American market, where we've got the data, we've got the tools, and what we're looking at doing is to provide our customers with just direct access to the data, so they can use whatever platform they so choose to analyze their data, whether it's a Microsoft-driven platform or any other type, Power BI or whatever other platform is. And the return on investment is very clear. You know, when you pick an operator, we are able to identify, especially with some of the new modules that are powered by AI, in very detailed individuals who's likely to cancel the membership, and therefore what would be the most advantageous intervention to make sure they can keep that. And that's how they measure the return on investment. When we look back to the problems that we solve, is you know, it's all, for example, for operators, because it's the easy one to quickly explain, it's about how much would it cost me to lose a customer versus retaining it. How much would it cost me to, you know, what's the return on me increasing the yield per customer or even increasing the lifetime? That's why the return on investment is very clear and very simple for them to calculate. And they've got the data. They've got the data to evaluate this. So it's not us telling them. They can see that straight from the data. Are we able to scroll down? Those are the questions. I think that there is another question around, you've indicated your interest in accelerating through M&A. Can you outline the criteria you use in assessing opportunities? Yes, so we are very focused, as I've already mentioned, in the North American market. So we are looking at opportunities for businesses that operate in our space, but offering different elements, but there are some overlap in terms of the services they offer, whether it's in analyzing data or even providing data. Because what we're really looking for in the North American market is to increase our infrastructure regionally, so we can accelerate how we service and how we exploit our opportunity pipeline. We're not looking at loss-making businesses. We want profitable business. We want revenue-generating business. That's very important for us. One thing I haven't mentioned is that, you know, we've been in business for 20-odd years as a private company. We know how to run a profitable business. We know how to manage cash and other elements as a private business. We've only raised capital twice, one for the IPO and another one at the IPO, which kind of shows that we understand how to run a profitable business and how to manage cash very, very carefully, which is why we're looking to businesses with those kind of attributes, because that's what we're good at and that's what we want to acquire and win. And I think the final question, which I'll hand over, I'll start it off and I'll hand over to Keith, which is around liquidity. So are you doing anything with your broker to increase the marketability and liquidity of the shares? Most days, no shares are traded. I think one of the key things that hopefully gives a lot of comfort to investors, although I appreciate the impacts liquidity, is that management holds about 56% of the shares. I personally am not just the founder of the business, but I hold 51% of the business, which means the interest of management and certainly the interest of the CEO are certainly aligned with the interests of our shareholders to maximize value and to do everything that we can to grow the business and maximize the return for all of our shareholders. We've also been doing this for a long time. We know a business that have started 2-3 years ago, raised a lot of capital and gone through capital. We've been in business for a long time and got a very strong track record of managing our cash and managing our business very successfully. And that's what we're going to continue doing. And I think in terms of increasing the marketability, what we're looking at doing is increasing the interaction with the market and with investors and potential investors, providing more news flows. But in terms of liquidity,
it's really all of that. We've appointed Canaccord as our brokers, which we regard as a very positive step. That they are working closely with us to improve that, but also our financial PR company, Alma, who are working very closely with us as well to get news flow out into the marketplace and get that level of engagement. And hopefully, when we win some very large clients, we will be announcing those out into the marketplace as well. Reiterating what Eloy has said, our focus is going to be on North America, which we will see as an exciting opportunity, but also just a huge growth potential for us. And part of that has been the migration and us working with existing clients over this side, and then working with them in North America as well. So I would hope over the next 12, 24 months, there'll be a lot of news flow, which will hopefully increase the level of interest in the company.
Thank you, Keith. And just one final question that is on the Q&A section. What is the current cash position of the company, and can you please provide further details of the debt of repayment terms? I'll start and then hand over to Keith. We've agreed a repayment plan with some of our debtors. Not with all of them, just with one particular debtor. And in our view, we've been investing in growing the business and growing certain relationships. And I think one of the things that we constantly have to gauge is a balance between growing and developing those relationships with where we invest in the cash. I'm very confident that what we're doing is investing in the future and in the growth of the business, and I think the numbers speak for themselves. We are very good at managing cash. As I said, we've been in business for over 20 years, and we've only done 2 fundraisers. One, to put shares in the market, so we had to do that, and secondly, to fund the IPO. So we do manage our cash very carefully, and there is no anticipation of any of that debt turning bad. And I think it might be worth talking about that, but also about the terms of the provision. That is not for bad debt.
No.
For other things.
So probably just skated over the provision, but that's there just through a transaction risk. We as a board have entered into a payment plan with the debtor, and this is operating in the Middle East. We've highlighted that in the report and accounts. And because of the length of time, we as a board have taken, which we regard as a prudent step, of making a provision against the tail end of that payment plan. And that's purely based on a transaction risk through the effusion of time. It's not anything that we haven't agreed with the client. They have confirmed that they will that the debt is good and that they will stick to that payment plan over that period of time. So I think that we've been pretty conservative in presenting that number. And then there's a requirement, which I think there's some bit of misunderstanding, because again, the debt is over 12 months under IFRS 9. We have to do a discount calculation on that, and that's shown through the finance line in the report and accounts. So from our perspective, yes, the working capital would be better if we could have collected that cash and converted the debt back into cash, but we have a view and a belief in that. The other point was, what was the cash? On one of the slides we gave at the 30th of June, the cash position was 300k for the company, so that was up from the March number of 150,000.
Thank you. I think that covers all the questions that were posed on the group chat.
Fantastic. Thank you indeed for covering off all those questions. Of course, any further questions come through, the company will have the ability to review those, and we'll publish those responses on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which is particularly important to the company, Eli, may I just ask you for a few closing comments, please?
Yes, thank you. Well, first of all, thank you for your time. I just want to reiterate, we're really excited about the potential of our business. We've got a unique asset, in our opinion, that provides really unique insights to our customers, and that's not me saying, it's our customers saying. We've got some really exciting markets in which we operate in, and I think you should take comfort that we've always been prudent. At times we've been criticised for being conservative and prudent. But one thing that hopefully we've demonstrated since coming to the market is that we deliver on our promises, and we will continue to deliver on our promises. And we're in a great position to capitalize on some of the market trends and opportunities that I highlighted earlier. So thank you very much for your time again.
Fantastic. Thank you all for updating investors today. Could I please ask investors not to close this session? You should be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of 4GLOBAL PLC, we'd like to thank you for attending today's presentation, and that concludes today's session. Good afternoon to you all.